Oh, they're so quiet. You're making me nervous. Okay, let me share my screen.
Oh.
All right. Start a new session. So this is going to be weird because I won't be able to see the chat. Well, maybe I should log in on my phone. That help? I can't do that. All right. Sorry, guys. I just don't want to be able to, I don't want to. Nope, that's not going to work. All right, so let's get started. I'm hearing myself echoing. I wonder if, oh, there we go. Okay. All right, so welcome to the very first Home Ownership Made Easy for Moms webinar. I think I'm gonna take my shirt look down because I am too high. And so this is just gonna be a conversation about homeownership and the process and how you as a mom or a lady can get yourself positioned in order to enter the industry. I'm hearing myself echo. All right. All right, so let's get started. So first I want to tell you congratulations for making the decision to spend your evening with me. I will not be keeping you here very long. I want to cap it at an hour. So I'll speak for about half an hour, 40 minutes, and then I'll leave the end of it for questions because I'm sure you guys have lots of questions. But I just truly want to congratulate you for taking the time to come and get the information. Homeownership can be something that's pretty overwhelming, confusing, can cause a lot of fear. And so you're making the right decision by coming in to get the information, right? And so I just want to congratulate you. Homeownership is something that I'm very passionate about. And just to share a little bit about me, for those who don't know me, my name is Siobhan Bent. It's pronounced Siobhan with a V, even though there's no V in it. It's an Irish name. I've been made fun of. I've been called all types of things, but it's pronounced Siobhan. And I'm a mortgage broker. I'm here in the capacity of a mortgage broker. I've been working in the industry for 19 years, and I love it. I absolutely love it. Being here and being able to speak to you, to speak to moms, it truly, truly warms my heart because I do believe that I've been assigned to help shift the financial trajectory of moms in my city and my country. And so this is a part of my mission. So thank you for being here. A little bit about me personally. I love the Lord. He is the reason why I'm here. I'm eternally grateful for him. I'm a sister. I'm a daughter. I'm the first of 3 children from my mom. I have 10 godchildren, and I'm a mom of 1 7-year-old handful. Professionally, as I mentioned, I'm a mortgage broker, but I'm actually a serial entrepreneur. I'm always looking for an opportunity to work smarter and not harder. So I do have multiple businesses. You may not hear about them tonight, but just know that I'm an entrepreneur and die hard. I will never work for anyone again. I'm also a licensed life insurance agent, an author, a speaker, and everything I do is to help you build a legacy for your children. So my mission my assignment in life, I know Lord came down and told me this, is to educate and empower moms with the tools, resources, and most importantly, the opportunities that will help you to create an elevated spirit, to elevate yourself spiritually, physically, financially, most importantly, financially, but also mentally. And so today I'm here, as I mentioned, I'm here in the capacity of a mortgage broker, and we're going to talk about ways to build wealth, ways to build legacy by leveraging the power of real estate. And so I want to formally introduce you to my whys. I mentioned to you, I'm the mom of one. That's my little 7-year-old. He had his first communion last week. Naturally, as a mom, your children are part of your why, right? And so he's here. He's my why. He's the one that drives me to get up in the morning, because I'm not a morning person, but I got to get him up and get ready for school. And he's the reason why I go to sleep at night, to make sure that I'm rested to be able to deal with him at night. But on the right, you'll see that's my mom. My mom had me at the age of 15. And so I feel almost not responsible, because it sounds negatively when I say that, but I feel like it's almost my job to ensure that come retirement, which is only 5 years away from her, for her, that I need to be in a position that I can help her. Because again, having a child at 15, and then having your second one at 19, and then your third one at 27, she wasn't financially in a position where she could prepare for her retirement and her future. She was very focused on ensuring that we were taken care of, and she did an amazing job. She is the reason why I'm here. She's the reason why I am as strong as I am. She's the reason why I'm as ambitious as I am, because she's only showed me that you got to do what you got to do to make things happen. We chose different paths, right? She's an employee, but I'm an entrepreneur. But the vision is the same thing, making sure that you do everything that you can to make sure that your children have and do not lack for anything. So she's my why primarily. And then I think as a default, my son will just, benefit from my fruits, but he's also part of my why. And so today we're going to have a talk about the power of real estate. We're going to talk about getting started and how do you get pre-approved. We're going to talk about who's on your team. Who do you need to get you through this process? And then after you've figured out your team, what's next? And so the power of real estate investing. And so my story, a little bit about my story. As I mentioned, somebody's still coming in. I entered into this industry 19 years ago. But my first taste of real estate was when I was 22, I made the decision that I was ready to leave my mom's coop. It's time for me to go and spread my wings. And I had an option. The option was either I would buy a car or I would buy a home. And of course, I chose the latter. I bought a home because truth be told, you can't really live in your car, right? So 20 years ago, I made my first investment property. I purchased a 2-bedroom condo in the city of Toronto, Islington and Finch, 2-bedroom, right at the northeast corner for $100,000. And I put $5,000 on that purchase. Wow. 4 years later, I know, right, Vanita? 4 years later, I was able to sell that property for a $40,000 profit. And so nobody could tell me that real estate was the best way to allow your money to grow, because there was no bank account, there was no investment tool, there was no GIC that I was going to be able to invest $5,000 and in 4 years profit $35,000. There was nowhere. So I was hooked. But within that time frame of, of course, trying to make sure I'm paying my bills and building my credit and so forth, I was introduced to a mortgage broker. And so the opportunity to become a mortgage broker or mortgage agent at the time literally fell in my lap. And I didn't think twice, because I had my own experience. I'd seen what the numbers were doing, but now I wanted to take a position where I could help others to achieve what I also achieved. And so I entered into the industry, quit my job, literally like the next day, didn't think twice about it. And I've never looked back. Now, it's not an easy industry. Don't get me wrong. It's not that, it's sunshine and butterflies. It's not always that. It's quite challenging at times. And as the years have gone on, with market changes, with regulatory changes, with just overall industry changes, it has become a lot more difficult for people to enter into the market. And so it's a part of my mission to do whatever I can to arm you with the resources, the tools, and again, the opportunities to help you transition into homeownership. Because I strongly believe that real estate is one of the most secure, if not the most secure way to build wealth for your family. And so as moms, I do believe that it's our responsibility to position ourselves financially so that we can set up our children and our children's children and our children's children. And doing it the traditional way by working and just, saving your money in a regular bank account, it's not going to be able to do what we should be able to do to help our children. And let's say not what our parents weren't able to help most of us. And so this is why you're here. But I experienced that that windfall, I guess you can call it, with real estate. And so I've been educating the community and the masses for the last 19 years. But my heart really started to soften towards moms after I had my son. So of course, because, I had experienced it, I had gone on to sell that property and purchase 2 more. I would take my profit and roll it into other properties. But now my life was no longer about me. It was about me now, but also for my son's future. And so this is where Mortgages for Moms was birthed. If you followed me here, if you found out about me through social media, it's probably through my Mortgages for Moms page or on my personal page or for somebody who shared. But Mortgages for Moms is a community that I've decided to build and to just do exactly this, educate moms with what they need to know to help them get into the homeownership industry. And so what real estate really does, it forces you to save your money. Right? So yes, you can structure your budget. You can set, you're going to pay yourself 10% into an account. But with real estate, every month that you are making your mortgage payment, you are actually paying yourself and building your legacy. Because for every mortgage payment, there's 2 components in that payment. There's an interest portion and there's a principal portion. And so as you're making those payments, you're paying down the balance, which means that you're building your equity. And your property is actually appreciating. So it's like you're working, your money's working double time, right? And so this is why I was able to experience the growth, the financial growth with real estate. So you're paying yourself first every month, right? Unlike when you're paying rent, you're paying somebody else's mortgage, right? So again, you're here to get the information to figure out how you can make it work for you so that you can pay yourself first. By investing in real estate, your money is actually working for you. As I just broke down, you have the interest in the principal portion, but appreciation is also helping your money to work for you. And again, it's a legacy building tool, right? Because it's forced, it's locked, it's in there until you decide what you want to do with it, whether you want to sell and reinvest, whether you want to keep and grow, etc. It's a legacy building tool, all right? I hope that nobody is waiting. Okay. And so there's many ways to invest in real estate. I'm going to list a few, but tonight we're going to be focusing on the first one, which is typically the principal residence. So you can buy a home and keep it to live in, right? Which most of us do. And that's always the starting point, right? You can buy it and hold it, which means you're going to rent it out, lease it out to other people so that they are actually paying your mortgage for you. You can buy property, renovate it, and flip it. So it would be more of a short-term ownership type of situation. Flip it and sell it for a profit. Joint ventures, you can go into partnerships. And so this is something that I feel is something that we need to actually pay more attention to and explore, because again, with all the market changes, partnering allows your dollars to go a little bit further. So joint ventures could be could be done with a family member. It could be done with a friend. It could be done with just a straight business partner. But of course, in any type of joint venture, you'll want to make sure that there's the legal part of it taken care of and everybody's interest is protected. You can purchase REITs, which is a real estate investment trust fund, which it's an existing real estate tool or real estate investment, and that you're investing in and then collecting money on your investment. Assignments or pre-construction. So, new builds, new constructions, usually just buying the paper, right? You're buying the house on a plan. And so some builders will allow you to sell that paper for a profit, right? That's a whole nother class. And then private lending. Over the years, as changes have been made, the private lending industry has grown exponentially because with all the changes, with the market increase, a lot of people have been bumped out of the traditional way to get funding. So private lending is an option. And so that's also a way that you can invest in real estate. And so what do? I'm a mortgage broker. In summary, I work for you. I am not tied to any one institution. I'm independent. I represent the interests of both you, the consumer, you, the buyer, and as well as the bank. There's an expectation that I'm going to refer them business with clients who I know are honest, responsible, and can afford their products, right? Because mortgages are not one size all. And so the objective of my role is to ensure that I'm matching you with a product that meets your family's needs. So it's not just about, oh yes, I want to buy a house and I'm just going to get you a mortgage, a 5-year mortgage. No, I need to know the details of what your actual plan is. All right. I have relationships with banks, trust companies, regular mortgage lenders. There's lenders that are specific to us brokers that are regulated just like the banks, but are quite competitive in the market and deal strictly with brokers. So you have when you're working with a broker like myself, you have options. And so that's what you want when you are looking at getting a mortgage. A mortgage is a very, very complex thing. So you want to make sure that you're working with a professional that is going to have your best interest in at toe versus trying to just get a sale, right? And so the bonus with working with myself is that I work with you at any stage of your home ownership journey. So whether it's just an idea, whether you're ready, you know that you've already done your research and you just, you want to get your pre-approval and you're ready to go, or you just have no clue and you think that you might want to buy and you want to have a conversation. There's no restrictions with who I can work with. And I work with people at all different levels and we create a plan to help you get to where you're going. So any which way, anywhere you are, I got you and I can help you to do that. So let's talk a little bit about the process. Let me close this thing because I can't see. So the process, I'm going to be sending this out to everyone. And as you can see, there's actually summarized into 10 steps, right? There's a lot of moving pieces in getting a mortgage. But this is why when you're working with a professional, we make the situation a lot seamless and stress-free. We do all the work. I try my very best to not speak all of the industry jargon and lingo because it can get confusing. I try to simplify things and then walk you through the process. So today we're just going to talk about step 1, but you'll see that as I said, there's plenty of steps and a lot of things in between in getting your mortgage and securing your home. So step 1 is when we're having a conversation, right? Yes, you want to buy a home. Yes, you want to live in not Brampton, or if you want to live in Toronto, wherever you want to live, you know what your decision is, right? But for me, working for you, I need to know what exactly your goals are. I just don't need to put you in a product. Yes, I'm here. This is my job. This is my livelihood. But there's no benefit to me to place you into a product that I know that is going to cost you in the long run. So I need to know your full homeownership goal, plan, blueprint, whatever it is. Short-term goals, long-term goals. Short-term should always be get into your home as soon as you can, whether that is, again, 3 months from now, 3 years from now. That should always be your short-term goal. But once you get into the home, what is your long-term goal? How long do you plan to keep the property? Do you plan to just keep that one property, or do you plan to purchase other properties? Right? A strategy that I use to speak with my client, my mom clients, is long-term. The goal should be to have one property for each child that you have. or one property for every 2 children that you have, right? Because again, real estate is the tool that you can use to leverage to build wealth and to create generational wealth, right? So what is your short-term and what is your long-term goal? And most people don't think about this. They think about, oh, I want the best rate. I just want, a house that can accommodate all my kids. No, it's a lot more detailed than that. This is an investment. You're putting your money into something and you want to make sure that it is the right fit for you. So we're going to assess your budget, right? I do what's called a pre-approval, go through all of your income and your expenses. But the truth is, when I'm assessing your eligibility, I'm not factoring all of your monthly expenses. There's very minimal. I factor in the mortgage payment, the property tax, the heating, if there's heating, and if it's a condo, there's a condo fee. That's it. I don't factor in, I factor in all the debts that you have on your credit bureau. So if you have a car payment, if you have a loan, student loan, those things are factored as well. But as moms, we have other expenses that the application doesn't ask about. We don't ask about, if you pay childcare. We don't ask about your groceries. How are you feeding your kids? We don't ask about your cell phone. We ask about your car payment, but we don't ask about your insurance. So I need to know your full budget. We need to know where your money's going, where it's coming from, to ensure that when you are taking on this product, that it is not going to be to the detriment of your finances, right? So assets, liabilities, all of that, we go into details. And then we review your needs before we review your wants. So homeownership, it's glitzy and glammy, you're a homeowner, it's great. But again, we live in GTA, most of us, and it is honestly one of the most, if not the most expensive, I don't think it's the most, but it's at the top of the list of the most expensive cities to live in. So if we have several children, 3-4 children, ideally, we would want a home that each child could have their own bedroom, ideally. But that price ticket could be way over what your budget is. So let's look at what you need. Your need is to get into a home that you can comfortably afford, that is going to allow your money to grow, whether it's a 3 or a 5-year term, right? That will position you to develop enough equity so that you can then move on to your next property that can probably meet more of your needs and wants, versus going at it jump and then overextending yourself and not being happy with your investment. All right. So we create a blueprint for your personal journey. Everyone's journey is going to be different. Everyone's journey is going to be different, right? The process is the same, but your journey will be different. You might have to save a little bit more. You might have to cut back a little bit more. You might have to, wait a little bit longer, right? Your journey is your journey, but if you know exactly what you're trying to do, right? We create that plan, then I think it makes the process a lot more easier and a lot more smoother. So first things first, right? Once you've made the decision that homeownership is the way that you want to go, which I hope everyone here has made that decision, you got to get approved. You got to know your numbers. In 2020, if you have connected with any professional in the industry and their first question isn't how much can you afford, run. You got to know your numbers first, because real estate investing, it's a business, right? So many people are thinking with their business caps when they're speaking to clients and prospects. But the truth is, it's an emotional purchase, especially on the first time. So if you're not sure what your actual budget is and you've engaged in the process, you started looking at, they're sending you emails and you're looking at properties, and then maybe you even go into properties and look and you fall in love, and then you come back and you try to assess your numbers and realize that, no, this is way too much. What's going to happen? You're going to get discouraged, right? You're going to lose hope. Always know your numbers first. So you want to get pre-approved or pre-qualified, and this avoids the emotional stress of the process. And so what being pre-approved means, it helps you to determine what your buying power is, right? Whether it's today, we would assess you on what you can afford in today's market, right? But again, with the plan, you know what you're working towards. Things will always change, but at least if you have an idea, you know what you're working towards. And so it'll also help you to understand what it costs to carry a home that would fit your family. All right, tonight we're not really going to go into numbers, but you want to know what the carrying costs are, right? So you know that when you're renting your unit, that it's one fixed amount, typically will increase by a little bit every year, right? You may have to pay utilities outside of that. But with a home, it's a whole nother kettle of fish. There's no landlord, first of all, right? So on top of your down payment, you do have to prepare for the expenses to actually close a transaction, right? And we'll talk about who's a part of your team afterwards. You got to know that there's mortgage, there's taxes, there's water, there's light, there's gas. If it's a condo, there's a maintenance fee. You might have to pay for parking. So you want to know all of the expenses that it would cost to carry that particular home or a home in that budget. All right. And by knowing that, that's going to actually tell you exactly whether or not you are ready to make this decision. Right?
Hey, you want to get off the bed, both of you guys?
What is a rate hold? What is a pre-approval? Essentially, it just really holds your interest rate. Right? So what I do when I'm taking a application for a client to give them a pre-approval or pre-qualifying, I gather all of your income documentation, all of your investment information, all of your savings information, because I have to validate that information before I could even submit your application to a lender. And so once we've done that, even though you haven't actually looked for the property, what it does is they secure the interest rate. So right now we're in a position where our interest rates are the bomb.com. Money's pretty much free. Well, it's not, but it pretty much is, right? It's really, really low. 19 years, I've never seen rates this low. They've been low, but not this low, right? So it secures your rate for up to 4 months. So if you're ready, if you're close to getting ready, it would be a good idea to secure your interest rate, because you really don't know which directions the rates can go. They do anticipate that they're going to be low for a little bit longer, but again, you still never, ever, ever know, right? People are still coming in. But again, with the pre-approval, it's never guaranteed until it's an actual real application, meaning you submitted all your information, you found the property, and now we're asking the lender to assess all of the details of your purchase, and then the rate would be applied, but it's still subject to lender approval. And if you are putting less than 20% down, it's actually subject to lender approval and default insurer approval. So if you're putting less than 20% down, what you're asking for is a high ratio mortgage. And so in Canada, banks cannot lend more than 80% of the property value without getting insurance. And so what this insurance does, it protects the lender, but you pay for it, in the event that something happens and the bank needs to recall their mortgage and collect back or take the home, basically, right? So it's a two-stage approval process if you're putting less than 20% down. But also what a pre-approval does, knowing what your numbers are, if you are shopping in a competitive market like right now, right? Although we're in the midst of a pandemic, right? The market still hasn't stopped. People are still buying homes every day. There's multiple offers. So you want to make sure that you are secure and know that, you're putting in an offer, that your numbers are actually authentic. You know that, yes, you've been assessed and this is what you qualify for. So it gives you confidence in a competitive market. So how do I determine what you're approved for? Guys, you want you to write this down. This is called the ICE formula. ICE, baby. All right, nobody's smiling with me. My goodness, guys. Is it too late? I should have made this earlier. So the ICE formula: income, your credit, and your equity, which is also known as your assets or your down payment. How much are you bringing to the table? Hold on, I think there's a message. That's fine. Can you read it? Right. Turn off the mix. Okay. Can everyone mute their background for me, please? Sorry, I didn't see those messages. Thank you. Oops, hold on. So the ICE formula, income, credit, and equity. Those are the three main pillars a lender is assessing when you are submitting an application for your mortgage. So your income, the main thing is they want to know that you can pay the mortgage, right? How are you going to afford this mortgage? And so if you are a salaried client, pretty much we just have to provide a letter of employment, which they do verify, they call, supported with pay stubs, dated within the last 14, which is a new COVID measure. It used to be within 30 days, but because again, things are always changing. We have to also provide your T4s and your tax assessment. So taxes need to be up to date. If you do owe Revenue Canada, then you have to ensure that it's paid by time you are actually applying for your mortgage. If you get paid by the hour, if you earn bonus commission or on commission, like myself, I'm a commissioned agent, we use the last 2 years because we have to average that income. When income isn't guaranteed, lenders are a little bit hesitant. They prefer, they'll lend, but they still prefer that security to know that this is exactly what you're going to get every 2 weeks or every month or bi-monthly, whatever that is, and you can afford the property. But when you have fluctuating income, there's a little bit more documentation that we have to provide in order to give the lender the surety that your income is consistent. If you're self-employed or business for self, we have to provide proof of that, right? We have to provide proof of your income, because the bonus of being self-employed, right, is you can make as much money as you want, right? And typically we don't pay taxes on the commissions or the monies that we're earning, right? We pay taxes when we file our taxes. And so if we've made $100,000 for the year, but after we've gone to our accountant and we've written off our gas and our maintenance for our car and our phone calls and our cell phones and all of that stuff, our income could actually be declared at $50,000. So $50,000 is typically the amount that we would be able to use because that's what you've declared. However, if you can prove by showing, last 6 to 12 months bank statements of your business income being deposited, we can sometimes use that extra income to help support your deal. Other sources of income that are acceptable are any type of investment income. If you receive child support, child tax credit is acceptable to some lenders. It can't be your only income. It can be a contributory income. If you get alimony, or if you are purchasing a property that has income potential, in some cases, depending on the lender, depending on the type of property, depending on where the property is, we can sometimes use that rental income to help support your application and getting you approved for that mortgage. So credit, money management. The second pillar in the ICE formula is your credit. The lenders really, they don't know you, right? And even when you have a long-standing relationship with, say, one of the big banks, they're pulling your credit to see how you've been managing your debt, how you've been managing your money. And so with respect to your credit score, although you can get a mortgage with a little bit of a lower score, 680 and above is what you should be aiming for. And if you don't know me, but for those who do, they know that I have a full 2-hour workshop that I do strictly on credit, right? Because credit is a major part of the mortgage process. Because when you're submitting your application, the lender doesn't know you. They just know that you want to buy a house and you're asking for $500,000. But how are they going to validate whether you can or you can't? Even if you've provided your job letter and your T4s, they want to see how you've managed your debts over a period of time. So 2 to 3 years of established credit is what they're looking for ideally, right? Major credit cards are preferred, Visas, MasterCards, fixed loans, car loans, things like that. Student loans, which I didn't note here, but student loans are looked at if you are paying them They don't really help your credit, but if you don't pay it, it hurts your credit, right? So that's something that reports on your credit. So you got to ensure that that is taken care of and up to date. If you've had a situation where you filed bankruptcy or you've had a consumer proposal, there's no hope lost. You just got to do a little bit more work. You can get a traditional loan after bankruptcy or consumer proposal. But what their expectation is that post your bankruptcy, post your proposal, there is zero, when I say zero, derogatory reporting on your bureau. There's zero opportunity for you to, make another mistake. They want to see stellar credit, and you have to rebuild yourself over the course of 2 years, right? By reestablishing yourself, applying for new credit, making sure that you're making your payments, et cetera, et cetera. If for whatever reason, something happens within that 2 year after your proposal, after you're discharged, and you're not able to get lending through traditional lenders, that's okay. We can get you lending through other means. We have, again, when you're working with a broker, we have multiple options with respect to lending. So there is alternative lending that you can explore post proposal or bankruptcy. And so I've included a few tips on how to keep your credit in good standing. And so this is like the, what do you call it? The 10 commandments of credit. That's what I should call it, eh? So the first one, pay your bills on time. Pay your bills on time. I know that things can happen, you can forget, but when you're looking for or hoping to get a mortgage, this is imperative that you pay your bills on time. And I usually recommend paying it before the due date because you don't want any type of instance where a late payment reports on your credit. The reason is late payments hurt your credit more than anything else. So you just want to make sure you're making at least the bare minimum payment required on time. Keep your balances super low, right? 30% is the magic number. 50% is, fair. Anything above that, you're kind of treading into what do you call it? Credit dependency. That's how you see. So it affects your score. So you want to try to keep your balances as low as possible. Again, 30% is the maximum. So if you have a credit card that has $1,000 limit, you want to keep your balance a maximum of $300. All right. You want to have at least 2 years and 2 active trades. So trades are credit cards, car loans, anything that is reporting as a line item on your credit report. Minimum 2 years, and you got to make sure that you're making those payments on time. Again, I mentioned major credit cards are best. One, the interest rate is much lower. It's not low, it's not cheap, but it's lower than, say, a store card like Future Shop. I think it's Future Shop, right? Or no, Best Buy or the Brick or Leon's. Those cards typically have really, really high interest rates. Be mindful of any unused accounts that you have. So if you have accounts that you don't use for a long time, sometimes if there's inactivity, the account holder may cancel your card. So again, I'm going to show you on the next slide that you should actually be checking your credit on a regular basis to make sure that you're keeping on top of everything that's reporting there. Apply for credit only when needed. Only when needed. So not when we go into Walmart or go into the stores and they're offering us, tablet or whatever free subscription, only when you need it. Why? Because everything that happens on your credit report is a moving piece and can affect your score, but can also affect the overall perception of your credit. So you just only apply for credit when you need it. Avoid closing any credit accounts because it could affect your score, right? It could impact your score. Hold on, I think there's chats here. Oh, you're welcome. Somebody says renters are now reporting on time payments as well. Yeah, cell phones report on your credit too. But this is why you got to check your credit to see what's there, make any adjustments, and to also ensure that anything that you do is reflective accurately on a monthly basis. So yes, you don't want to close any accounts. Let's say if you even have old accounts, The older the account, the better for your card, your credit history, because one of the components of your score is your history. So the longer you have an account open, the better. But of course, if for whatever reason, if you have to, you can, but it's best that that you don't. And be careful of co-signing. I know I spoke about joint ventures earlier, but you know, the co-signing for cell phones, co-signing for cars, that's really risky, right? And so even though if you're not making the payments, the other person is responsible. If they don't pay it, it affects you because you're equally responsible, even though you're not actually paying. No matter how many letters we get and say, oh, you know, you're not responsible, you're doing it for your son or whatever, it's still your responsibility because it shows on your credit. So be very wary of co-signing for other people. And so again, you should be checking your credit very, very regularly. There's many options for us to go out and check our credit for free right now. Borrowwell is the one that I usually recommend to clients to avoid me having to pull your credit if I don't have to. It's free. It's not 100% accurate, but it gives you a good marker as to where you are with respect to your credit. So Borrowwell is very useful. It pulls from Equifax. Or if you use Credit Karma, that pulls from TransUnion. And so it's good to pull both of them because you want to make sure that the information that is being reported is, again, accurate. Anything that needs to be removed or edited, you want to make sure that you're on top of that because every little thing that happens on your credit affects your overall scoring. And so now E, with respect to the ICE formula, is your equity. How much skin do you got in the game, right? The bank wants to know. We're not doing that. You're buying a house for $500,000. We're not giving you $500,000 anymore. We used to have programs like that, right? So they want to know how much do you have. And so how are you saving that? There's actually a system that we have to follow when we are submitting for down payment. I have checked both Borrowwell and Credit Karma, and they both have different numbers. Why is that? That's because each agency reports things differently. And so even though you pull credit Borrowwell and you've pulled Credit Karma, and then if I pull your Equifax, that number will also be different too. So there's no one answer to say why it's different, but other than they do report the information differently. So when I pull your Equifax report, I only pull Equifax when I'm submitting applications, but the lender also reserves the right to pull your TransUnion. So this is why I suggest it's best to pull both because it's the derogatory information that you want to make sure. The score, again, as I talk about in my credit workshop, the score is really, we've been trained to drive after high scores, and they're great when you're applying for things, but the truth of the matter, your credit score really just tells the lender how much more money they can lend you. So it really benefits them, right? So don't pay too much attention on the score. Just make sure that everything you're doing on your report is accurate, and the score you'll reap the benefits of a higher score. All right.
Sorry.
Go ahead. Yeah.
I was going to ask you regarding the credit score with your bank.
Mm-hmm.
Is that one okay?
They're all okay to some degree because, again, the bank use a different type of system. So they will pull your score and it could be like 50 points less than what I pull. So they all do different scoring. And so when we're assessing your application, it's based on whomever the lender you're using.
Okay, thank you.
You're welcome. I hope I answered your question. So with respect to down payment, right? There's different ways in which you can save your down payment. Traditional savings, through your savings account or an investment account. For us Caribbean people, Padna, Suso, those are non-traditional ways of saving, but those are not acceptable by the lenders. So if you are saving your money through these means, you do have to make sure that you place it in your account 90 days before you are ready to make your purchase, because we have to show the bank a 90-day history of accumulated savings. Now, if they see anything over $1,000, $1,500, that is not a paycheck, then we have to show where it's coming from. And so I can't tell them that it came from Padna. It's not acceptable, right? You can receive a gift from a family member. Is there a question? Okay. You can get gifted. Your down payment can be gifted from a family member, immediate family member, mother, father, sister, brother. Anyone outside of that typically is not acceptable, because their fear is that you are borrowing money to purchase the home. So basically, if you don't have any investment in the property, their thought process is that you won't be as invested, right? RRSPs, if you have an RRSP through your workplace, or if you have an RRSP on your own, there is a program that you can leverage as a first-time home buyer to withdraw money from that without having to pay tax or interest on it for a period of time. And so that's $35,000 for one person. If you're a couple, that's $70,000. There's also a strategy around that where you can get a loan to invest that money in an RRSP. And then there's tax benefits to that, but we could talk about that on an individual basis. There's affordable homeownership programs. There used to be an amazing one in Peel Region that stopped about 5 years ago when our market just kind of went through the roof and the program could not meet the demands any longer. But there is still one that is active. So if anyone here is interested, it's in Dufferin County, which is Orangeville, Shelburne, that side of town. They do have a program where they will give you the 10% of your down payment, 10% of the purchase price as a down payment to purchase in their region. All right. There are some stipulations. Of course, you have to not own any other property. You can't be co-owner on anybody's property at the time of application. You have to make a certain amount of money. There are some guidelines, but we can go through that if you're interested. Rent to own is another option to getting into homeownership. It's really not one of my favorites, but it's definitely out there. And if you're a newcomer, there's also incentive programs that can help you with that for your down payment as well. And now, so who's on your team? Who do you need to let this happen? So that's me, by the way. And so me, of course, right? So everyone's here, I'm assuming, or hoping, or praying that if you're ready to go, that you will call me and that we can go through your numbers, right? Because you got to know your numbers first. I said this earlier. Real estate investing is an actual business, but as first-time home buyers, if you're a first-timer, it's typically more of an emotional thing. So I don't want you to be disappointed. I don't want you to lose hope. So know your numbers ahead of the game. You'll need a real estate agent, whether you're purchasing from a new construction or a resale property. As a buyer, you do not pay for their service. So it's in your best interest to utilize a real estate agent who is going to look after your interest first. They will search your properties based on your budget and what your family's needs are. And they have access to information that the average person doesn't have access to. So you can go to, I think the website is mls.ca, and you can see what's there, but most times that information can be outdated. So it's always best to work with a real estate agent. Property inspector, any property that you're purchasing, you will want to have an inspector go in. It's a 3-hour assessment. They go from the roof, unless it's a condo unit, they'll go from the roof all the way to the basement with a fine-tooth comb to make sure that there's nothing there that is going to cause for concern or cause an expense after you purchase the property. Real estate lawyer. Every transaction requires a real estate lawyer. They are who receive and exchange money and keys for the purchase. So with respect to myself, my services are free. Real estate agent as a buyer, their services are free. You will be responsible for the inspector as well as a real estate lawyer. But if you have a financial advisor too, remember I said, you got to know your numbers, but it's also about your entire financial plan. Homeownership may not fit your financial plan right now, or it may, but it's always good if you have an advisor to speak with them first. I do some financial consulting as well, but it's always best to get a second opinion to make sure that you're making the right money move, because you just don't want to just do it and then regret it later. So now I've given you all this information, and I know that you have questions burning in, I can feel my ears burning. So let's talk about it. Let's talk about what your questions are. I'm going to, let me see if I can, yeah. I have a couple questions that I had received before, but I want to open the floor to you first and let me know whatever questions you have and see if I can address them. No one has any questions? Is it best to pay off your OSAP? If you have high monthly payments, yes, it would be, because the more debt you have, it doesn't prevent you from purchasing, it will impact how much you can qualify for. So if you've got high monthly payments, so if you have a high OSAP payment, you've got a high car payment, it's going to really factor how much you can qualify for. So the less debt you have, the better. Again, because the qualifying criteria is a little bit more different. I mentioned earlier that our interest rates are super, super low. But in terms of qualifying, we have to use a very high rate to qualify you. So if you have a lot of debt, it will impact how much you qualify for. Why do some areas have higher property taxes? For example, Oshawa. Basically, it's what's happening in the city, right? How the city manages their money, what expenses, that's a whole government question that I can't give you the specifics. But yeah, with respect to real estate, location is always something that you will hear. So it is something that you want to factor as well. But property taxes go up everywhere. All right, so nobody's talking to me or chatting. Okay, I'll put them in the chat. Is now a right time to sell? Is now a right time to sell for your family? That's the better question, right? I can't say yes or no to your particular situation, because again, the market is still moving. It's a seller's market right now because there's more buyers than there are sellers.
Mm-hmm.
So a real estate agent would say, yeah, it's a seller's market, sell. But does that make sense for your family? Because when you sell high, you also got to buy back high.
Right.
So know your numbers. It always boils down to your numbers.
Thank you.
You're welcome. Does being on the OSAP wrap, what does wrap mean? Does that mean the deferment negatively impact you? I don't have any payments because I'm on wrap. Is that the new terminology? I thought it was called interest relief. Even if you're on interest relief, I think that's what it is, we will still have to factor the payment, even if you're not actually paying it, because it shows on your credit. So let's say you have the home for 5 years, or you're asking for a 5-year mortgage. And I know that let's say with interest relief, you have to reapply every 6 months or so. So what happens if the next 6 months you're not eligible, right? You are then going to have to make that payment. So we have to factor it in, even if you're not making the payments. Why don't I like rent or own? I think it's a very, very, very expensive way to get into homeownership. I would rather you work on your own and save that money, because what it is you are paying the rent for the property, right? So let's say it's costing the investor $1,500 in mortgage. So you're paying $1,500 for the rent. Plus, you're also topping up, let's say $500 on top of that. So you're actually going to pay $2,000 per month, because you're saving that $500 over the course of the term. And so I'm like, if you're going to pay $1,500, why not just pay $1,500 and save that on your own? That's just my philosophy, but there's many people that use it. But I personally, in my 19 years, I've only helped one person with it because I don't like it. Do you think the housing prices will go down at all? Maybe a little bit, but not a whole lot. We are entering into the fall market. Fall and winter is typically a slower time. It doesn't stop, but it's a slower time. So it may stabilize a little bit because people don't want to move in the winter. Do you have to have a full-time job, and how long do you have to be on that job? You don't have to have a full-time job, but if you're part-time or if you're on contract, we have to use 2 years of your filed income, right? So we average it. So if you don't have a full-time job, then if you, let's say this year you've made 60,000 on your part-time job or contract job, but last year you only made 20,000, we can only use 40,000 to qualify for the mortgage. And how long do you have to be on the job? You can be on the job 1 day as long as you're not on probation, but typically they want to see that you're in the same industry within about two years. And that could be on the job, it could be in school, but 2 years of some type of continuity. Land transfer tax. Does this apply to first-time home buyers? Land transfer tax is on every purchase, whether it's new construction, whether it's resale. But as a first-time home buyer, you do, there's an incentive where you get a land transfer tax credit of up to $4,000. I think it's up to $5,000 off of that amount. So if you're purchasing a home for $500,000, and what land transfer tax is, first, let me say, it's the government's, hand that they want something of, they want a piece of everything. So when you're purchasing a home, to transfer the ownership from you, Vanita, to me, we get taxed. So that amount could be like $3,500. So if you're a first-time home buyer and you got an exemption up to $4,000, then you won't have to pay that land transfer tax. But on your next purchase, right, you've sold that home and now you're buying another home, and that property, that land transfer tax is $3,000. You will be required to pay it because you only get that one time. Do co-op homes qualify for a mortgage? They have. It depends on the cooperative, the management, the financials. Yes, it can. What are the typical interest rates right now? Interest rates are less than 2% on a fixed mortgage. On a variable, it's prime minus 0.5. So you're paying about 2.15. So rates are really, really good. But we have to qualify you using the stress test. And so the stress test right now rate is 4.79. So that's almost 3% more. And so how that impacts you? Greatly. Greatly. It affects your buying power by at least 30%. What are the typical okay, answer that. And how long do you suggest locking in your mortgage? It depends on the needs of your family. Typically, lenders will give their best rate on a 5-year. Although a 2-year may seem like it's lower than a 5-year, but if you think about it, in 2 years, anything can happen. And so rates can increase. So you've now exposed yourself to the market in 2 years. So if you pay like a 0.5% more for 5 years, in the long run, it's better. So it really depends on what your purpose is of holding that home, how long you'll have the home, which determine what term you need. Gifty says, I know you said rent to own is not one of your favorite. Could you please elaborate or explain why, if possible? I just did. So I'm not very sure if you heard me, Gifty. I just feel like it's a very expensive way to get into homeownership. That's not the popular, those who are using the program, they're going to say, Siobhan's talking crap, but that's just my opinion. It is an option, but I'd rather see and create a plan with you first before we go that route. Can you explain what a rebate is? A rebate is something that you would get back. So for example, maybe not in your hand. So let's say the land transfer tax, right? It's a credit, it's a rebate. So let's say on paper, it would say that the land transfer tax is charged on your account, but because you get the credit because you're a first-time home buyer, it'll be charged, but it'll also be credited. So it cancels itself out. That's what a rebate would be. Or on a new home, I think HST, once you purchase a home, you pay HST. And then after you've closed, you can then submit for rebate and get a portion of that tax back. What is a good monthly or yearly income to qualify for a mortgage? A good monthly income, yearly, so annually, I would say a combined income of 100,000 would get you a decent mortgage right now in the GTA. That doesn't mean if you go further out, if you get more cost-efficient home, and that's mainly because of the stress test, right? Because we have to qualify you at a higher rate, it does eat up most of your buying power. I assume credit score, debts, and etc. make a difference. Absolutely. Those are all part of the factors. So remember, I went through the ICE formula. So your income, which we just talked about, your credit score. Lenders these days they're looking for a higher score. So 680 and up is the preference. We do have some lenders that will still accept around 650. And then your debts, of course, impact how much you qualify for, because we do have to factor all of your monthly expenses in the debt servicing. Can you explain in a bit more detail how long one would have to wait if they have a consumer proposal on their record? 2 years. 2 years of reestablished. So the last day that you've ended and you've been discharged, 2 year, the lender wants to see a 2-year history of reestablished credit through traditional lending. But if let's say you have 20% or you're being gifted the down payment, you can do it the next day through other lenders. I have debt and I am working to pay it off without getting a proposal, but people are encouraging me to get one. What do you recommend? I won't make recommendations on this platform. We can definitely have a conversation. All right. I got to see before I can say. I heard you. Okay, awesome. What do you feel is a good amount to have saved up before opting to buy a home? And is 5% down for all first-time home buyers or only when you're going through a builder? Nope, 5% is available to everybody, even if you're a repeat buyer. I bought my third and fourth home with 5%. Yes, so anybody can buy at 5%, up to 500,000. Any purchase that is over 500,000, you can pay 5% for the 500,000, which is 25,000, and then let's say the property is 650, you have to pay 10% of the difference. So 25 plus 15,000, so you would need 40,000. What is a good amount to be saved up? 40,000. But again, it depends on what your budget is and what your family needs are.
Do they still have that, going back to your 5%, is the government still running that program where it's not match, I forgot the name.
It was called the incentive program.
Incentive program, correct. Yes.
I didn't do not one. I'll have to Google that, because for one, I didn't like the program.
Reason being?
Pardon me?
Reason being? Why you didn't like it?
Why does it's called a shared equity program, right? So yes, they're matching your down payment, but then you have to pay the government back the equivalent of your profit. Why? Right? And just the government they overextend too much. It wasn't a popular product, but I can definitely check for you to find out if it's still available.
Okay, thank you.
Yeah.
Sorry.
Yeah.
I have a quick question, Crystal. So sorry, they wanted a percentage of your profit, not like interest on what they loaned you for the down payment?
Both.
Oh, wow. Okay.
So if they gave you 5%, you have to pay back 5% plus
interest.
5% of the appreciated value.
Wow. Okay.
So Kalisha says, what do you feel is a good amount? I answered that already. How many co-signers can be added to the purchase sale? The maximum is 4. Anything above 4, they don't like. If your income is under 40, are you still able to qualify for a mortgage? You could definitely qualify for a mortgage. I just don't believe you'd be able to find something in your budget in the GTA. How many people can be on the deed? I would say still 4. 4.
Going back to the program with Orangeville and Shelburne, I remember seeing a program like that in Waterloo, and they require you living in Waterloo for a year, like rent a property or so. Does that apply to
each region? Will have their own stipulation. So when Peel region had it, at first you didn't have to live in the region. Then they changed it. You had to live in the region already. The one in Dufferin County, you don't have to be living there, but you would be buying there. So each region is going to have their own guidelines.
Okay, thank you.
Is that on top of the Dufferin County incentive, is that on top of the first time home buyers incentive? Like, can you put, like, stack them or?
No, you can't stack them. You can't. Good idea, but no, you can't. Are there better areas to look in for a home? When you mean better, what do you say? Example, further east, north. There's always options, right? Always. Affordability would cause you to go further, east, north, right? Because again, GTA is fairly expensive. But also keep in mind that everyone is going outskirts as well too. So those housing prices are also increasing because the competition is there. So the further you go, it may be more economical, but then you also have to factor in the expense to commute if you're working. So it really, again, it always depends on what works for your family. But in terms of affordability, you would definitely have to go outside of the GTA to find something cheaper. If you make 40, how much would you qualify for? So we have like a little unspoken rule. If you take your annual income and multiply it by 4 let's say 7, that'll tell you how much mortgage money you qualify for. So 40,000 times 4.7, that's 188,000. So if you had $20,000 on top of that, you would buy a property for 208,000. I can't, and that doesn't factor if you have debts. So if you have debts, that would also affect that. I canceled my credit cards plus paid them off. How can I show good credit? You'll have to apply for a new credit card, and you have to, if you're planning to put less than 20% down, the lender wants to see how you pay your bills. So if you don't have any credit, it's great not to owe debt, right? Which I talk about in my credit workshop. It's really great not to owe debt, but it's kind of a catch-22 because when you're applying for a mortgage, they want to see how you pay your debts. So you kind of have to have debt. Any other questions? I can show good credit establishment, but you have to have activity. So it has to be current. So if it's closed, yes, it'll say that you have, you've paid all your debts and you may not have had any late payments or anything. But if there isn't anything active, that's what they're looking for, something active accounts. Sorry, you said if you have a credit card and you're not using it, it goes against you, inactive for say. No, I'm saying if you do have a card and it's active, you want to just make sure you're monitoring it because the credit account holder could cancel it, or there could be an annual fee that's being put on it that you're not wary of and you're missing payments. And then also you're exposing yourself to fraud, right? Somebody gets a hold of your profile and they find you have an account that is open. Yep. You're welcome. Yeah.
Sorry, you were saying that the annual income would be 100,000 to be approved for a good mortgage in the GTA. But what if we go further out, like for example, Kitchener, Cambridge area, Waterloo, basically?
Yeah. So again, it depends on the price of the home, right? But because of the stress test, whether the home is more affordable, right? The interest rate's great, but it's the qualifying. The stress test is what's causing this challenge. We have to qualify you at a higher rate.
Okay.
Right? So the house could be more affordable, but it still factors how much you can afford.
Okay, thank you.
You're welcome. Hold on. Thank you for having me and giving so much information. You'll be hearing from me soon. Awesome. Thank you, Anne. Is a credit card or secured credit card the best way to rebuild? It is definitely a great way to start rebuilding. If you are, depending on what you're rebuilding from, right? So if it's a bankruptcy or consumer proposal, typically if you try to apply through traditional means, you may not get approved right away. So you will definitely need to go the secured route and to start rebuilding yourself. Yes. What credit score rating do we need to qualify? 680 is a good target mark. But some lenders will do at 650, but they prefer higher. Does the stress test only apply if you're putting less than 20%, or if that? It used to be just for people putting less than 20%, but now it's for everybody. Now it's for everybody. If you're putting more than 20%, then we have to do 2% plus whatever the contract rate is. So if they're getting 1.75, then we have to add 2% and chart and qualify them at 4.75, versus you putting less than 20%, we have to use 4.79. You guys got some good questions.
So, Siobhan, I have a question for you.
Yes, ma'am.
With the banks, they use the Beacon score, right?
Mhm.
So, how does the Beacon score differ from TransUnion score and Equifax's score?
There's just many, again, because each system uses different ways to calculate, they essentially are all the same thing. It's a Beacon score, FICO score, credit score. They all really mean the same thing.
Okay, then.
That's usually my tagline. The stress test is very stressful. Yes, it is. How do you go about buying the paper for the home? Is there a certain amount for that if you're trying to do investments? How do you go about buying the paper for the home? Do you mean on a new construction, Kalisha? That would be, no, you would go to a builder. You would go to a builder and buy from the plan. That's when you're buying the paper. And so based on whenever the completion date is, if you wanted to do it as a flip or an assignment, meaning you're selling the paper, you would have to ensure before you sign that you have that option. But you definitely have to go directly to a builder to buy a property on paper.
Sylvan, I have a question for you. Can you hear me?
Yes, I can hear you.
It's probably a little more complex. I have a situation where 3 people are coming together to purchase a home, and the full amount of the down payment is gifted from the grandparents. So I was advised that it's a good idea for them to put portions of it into an RRSP, wait 90 days, and then use the home buyer, what do you call it? The
RSP thing?
Into RRSP, and then because then it will not be classified as gifted, and they would now qualify for or have exposure to more lenders who won't frown on gifted down payments. What's your opinion on that?
That is definitely an option, but the same thing, if they're gifting you the money, you can just put it in your account and leave it there for 90 days.
Okay.
And it's not to say that they are opposed to gifting. It just has to be from an immediate family member, and it will have to be put in the account. And sometimes they do ask for the gifter to also send their account information as well.
Okay. And is there any benefit then to doing the first route that was mentioned, the RRSP route?
Oh, yes, in the sense where you would, you're getting the tax write-off, but you're getting an income tax return. So when you invest in your RRSPs, you are getting, you're not being taxed on that money, and then you can reinvest it. So yes, there's that option, but it is something that you will have to repay within 15 years.
15 years, yeah.
Yeah.
Okay. Thank you.
You're welcome. Kalisha, you're asking if I help with buying the paper. I personally don't work with the builders. If you have the paper and you come to me for the mortgage assessment, that I can help you with. But in terms of finding the builders, you can just kind of drive around or Google the different developments and stuff like that, or work with a realtor. A realtor can be able to help you with that. You're welcome. Love the questions. Love the questions. Are there any special homeownership programs for people of racialized community? Not yet. And okay, so can I let you guys in on a little secret? This is what one of my prayers with. Maybe you guys can stand in agreement with me, because I truly believe that mothers should be identified as a community, and that we should also have access to particular funding to help us build wealth, i.e. First Nations, i.e. first-time home buyers, i.e. self-employed people. Like everyone has a category that they can fit into. I believe that we should have one too. So there aren't any yet. I know you said racialized, but we're a community. I feel like mothers are a community and we should be afforded the same luxuries. So if you guys can just pray with me, because that's what I'm fighting for. But right now, no, there isn't any that I'm aware of. All right, so thank you for all of your questions. They absolutely do. They sure do. It's because of your credit seminar why I believe I can still do this at this stage in my life. Thank you. Oh, you're welcome, Benita. That's my whole purpose, provide you with the information so that we can make it possible. It can. We might be able to do it the traditional way. We have to, get strategic, right? Or talk about joint venturing. I mean, it's something that our culture doesn't really like to do, but I'm telling you, we got to do it. Thank you, Siobhan. Amazing as always. We'll talk soon. Siobhan is great. I started the process with her and I can't wait to get into my first one. Oh, thank you, Davika. Awesome. Hold on. So before you guys go, I have a question for you. All right. And you can just put in the chat. So are you ready to start your homeownership journey? And remember what I said, everyone's journey is going to look different. Your journey starts with you saying, yes, I want to purchase a home, whether that is this year, whether it's next year, whether it's 5 years from now. So I'm going to invite you to, Ange says not yet, but you'd like to. That's okay. You have the intention. That's the start. 100%. Yes, yes, yes. Beautiful. Primary property and investments. Awesome, awesome, awesome. I want to in the next 2 years, but don't have the 40. Okay, we'll talk. We work on something. Guys, we got to get creative. We got to get creative. Something I didn't touch on. If your income isn't enough, we got to get creative. Start a business. Get a part-time job if you have to, although I don't like that. But do something to make some more money, right? We can't conform ourselves to the way things are just because. We got to step out of our comfort zone and do things a little different so that we can have different things. That is my philosophy. I am in the process of putting myself in the position to do it because of you. Oh, Benita, you're gonna make me cry. Yes, it's a goal to be a homeowner. Awesome. Intention. Yes, I love the paper idea though, through the builder. Yes, it's definitely a strategy. This is the time with COVID going on. Absolutely. Every time is a time as long as it works for your family. I'd like to take out equity in my current home to buy another property. Yes, let's talk. Yes, yes. So working on saving the closing costs. There you go. So I'm going to invite you ladies, as again, I believe that we are a community and that we should be afforded the same luxuries that other communities have. And so I'm going to invite you to join me on my private Facebook group where you can have direct access to me. I had over 100 people registered tonight, guys. And so I wouldn't be able to speak to everybody one-on-one. But I plan to do a whole lot of stuff in educating and bringing information to you in this group. So if you want to join me and our community, you go to mission1000moms.com and it'll take you directly to the group. But as always, thank you. I'm always accessible, but through email. Hold on, do I have that? I think I did that. So yeah, stay connected with me. On Facebook, it's Siobhan Bent. On Instagram, I am on Mortgages for Moms, and I am Siobhan Bent, my personal page, where if you aren't following me, please follow me so I can follow you back. Thank you, Tanya. Type in hands busy. Okay, thank you so much. You're welcome. Call or text, email. I'm always available. I'm here to serve our community. We are community moms. We are community, and we have to take charge of our legacies because the system isn't designed for us, right? And whether you are a single mom or you're not, I speak to moms, period, point blank. We just I just rock with you, all right? So if you have any questions, please reach out. Let's connect. Let's do, an assessment to see what your game plan is, and let's make it happen. Best be type in info here. The info is right here. Hold on. So thank you so much, mommies. I will send the recording if you'd like. There you go. All right. So everyone have a great night. Thank you once again for joining. If you know anyone who'd like to also join the group, please refer them. mission1000moms.com, and let's build this legacy together, ladies. Thank you so much.
Nice.
Have a great night.
Good night. Thank you.
Thank you.